I don't have. What's up, everybody? Happy Wednesday. Home Service Happy Hour brought to you by Service Master. I don't have the butt downloaded. I still don't have the butt downloaded to go live on the radio. I tried to download it, and then the download says, what does it say? Let me see what it says. Virus detected. And so I decided not to click on that because that seemed scary and stupid. That'd be a stupid thing to click on. Even if there's not a virus there, it seems weird that it says there is. And if there is, and I clicked on it, then I'd feel like extra stupid. So I didn't click on it. Here we go. But I am clicking this. I'm going to get out here, make this episode public so you guys can like it, share it. Oh, Angela just texted. We are still in a car on our way to the airport. So we're missing those folks today. Her and JC were up in Omaha just doing cool stuff, taking cool pictures of stuff. I don't know what they were doing. It was like an Aaron Rodgers darkness retreat without the darkness. That's what it looked like. Maybe cooler though.
That's where they were in Omaha?
Yeah, they were up in Omaha. I remember last week Angela couldn't come because she was on her way to Omaha. And I didn't know if it was just her or her and JC. And then I saw a bunch of I think it was just her originally. And then JC flew up there and met her. And I saw some posts from them. They were just out doing really cool stuff. And I assume they were in Nebraska somewhere.
Living the life of entrepreneurs. Love it.
I shouldn't say it was that cool. Like, we're talking mid-October here, and if you're in Nebraska and it's mid-October, I don't know why you would do anything other than chase whitetail deer. Like, it's going to be that time of year, and I didn't see any cool whitetail deer pictures, so it wasn't like they were doing the coolest thing ever, but they were doing some cool stuff, I guess. I know Sean. I don't know if Sean's going to jump in or not, but I did get a sweet email from the Higher Lead Chill team. Shout out Higher Lead Chill. Which Michael is our business partner in. So how cool is that? Like, we got the
sound effects.
Yeah, there we go. I like it that way. Actually, I think going forward, we just manually make our own sound effects. Like, we'll know which one we want to do, and so Jai just has to do them all vocally. Meow. It's good. Yeah, I think.
So what happened? What happened with Sean?
I assume
that intro.
Is it? What? Oh, we gotta do the intro, don't we? Yeah, then let's do the intro, and then we'll come back. Hit it. Welcome to Home Service Happy Hour, brought to you by Service Master. That was pretty loud. Do I just have my speakers turned up really loud, or was that just loud? Man, I liked it.
It is. Yeah, it is like just loud.
We also, when Angela's not here, need to have like a dancing avatar of her just like moving around.
Oh yeah, we got Jai. We got Jai to dance. Yeah, he's got it figured out. Oh, happy Wednesday, everybody! I did not get enough sleep last night, so there is Coke. Actually, it's Diet Coke in my whiskey today. Cheers.
You did good.
I did. In my description of this episode, I was very intentional about recommending that you all have some caffeine too, because I'm going to talk about some tax shit. And even I think that's boring. So you should probably get some caffeine in you. We got some definitions to get into because there's terms that I hear a lot, and I want to like set the record straight a little bit. And then we're just going to get into some like planning things that you want to start thinking about now, and then execute later. One of those things that I've already talked about the last few weeks on this show is our awesome sponsor, Service Monster. Now is not the time to start using Service Monster, which is a weird thing to say about the person that sponsors your show. Shout out Service Monster. But my point being is, like, there's the right time and place to put things into work. And miraculously, just this last week, I had 2 different demos with bookkeeping folks that don't have a CRM or are like getting a CRM lined up. And I love Service Monster. That's the one we use in our window cleaning pressure washing business here in the Twin Cities. It's freaking great. Love it. Every CRM is kind of funny. Like, the beauty is in the eye of the beholder thing. Like, there is a CRM that is going to look and feel and work the best for you. And Michael, you've talked about it before, that when you have a CRM, like, you're going to adopt processes based on the way that thing is built. It's kind of this funny, like, half art, half science thing where it's got to make sense to you. It's got to look good to you. It's got to feel good to do. It's got to It's got to match your process as much as possible, but you will not hit it on the head. There's nothing that's going to fit your business perfectly. It's too expensive, and you're not in the business of building a software. You're in the business of running a home service business. So it doesn't make sense for you to like create a custom thing. Find the CRM that fits best for you. For us, it's Service Monster. I love it. Might be something else for you, but it was astounding to me. 2 businesses. One is fairly new. They're doing a couple 100,000. And so they're kind of at the cusp where now's the time. And so that like they were talking about bookkeeping, and I'm like the worst salesperson in the world. I'm like, whoa. No, like we got to get a CRM first. Like you can't buy my stuff. We need to get you a CRM first, yo. Like I said, worst salesperson ever. But I truly believe that like a CRM is going to serve you more sooner in your business than bookkeeping. Not to say I'm not saying wait too long on bookkeeping, but first do the CRM thing. Another is like almost $1 million company without a CRM, and I was like, how have you made it this far? Just old school, right? Running a business old school. And so had that conversation. But again,
I can give a really quick shout out to Service Monster. So been doing coaching for a really long time, lots and lots of people, hundreds by now. I would say objectively, more people that I've coached have left Service Monster and come back because they're like, well, that was a bad idea. It's
the old grass is greener movement.
Yeah, like, I think I'm gonna switch. Like this one thing isn't there, and they switch to whatever it is, and then 6 months they're like, well, okay, never doing that again, and right back to Service Monster. So that's a good testament to what they do.
Yeah, no, that's a super good point. And like I said, I think there's a time and a place to switch CRMs. If you don't have one, then it's like get it set up ASAP. I don't know, like running a home service business without it. I would think it's probably the most important thing for operations to be able to scale up a home service business and get employees and get them out to the right spot with the right notes of who to do and how to charge people and how to retarget them. I can't imagine running a business without that technological capability. But again, we're going to be talking about planning stuff. It's going to be tax related today, but
one thing that you got to mention the beneficial ownership information, the BOI report. If you're not going to do that one, add that to your list. If you're not familiar with that one.
Oh yeah, we should touch on that.
It's a big deal. It's due December 31st.
Literally, I'm going to write it down right now because I still need to do it.
There you go.
Yeah. Hey, look at the value we're adding today for me so that I remember to do shit. Yeah, that's a funny one. That's new. So make sure you're on it. It's one of those things where they sent it out so long ago and it's such like a templated, hey, make sure you do this thing that I almost initially didn't take it seriously. Cause it's like, oh, it's so far out there and it's just like, and hey, here's some stuff you need to do. And then but I mean, in addition to you just saying it, like, then I had a chat with my CPA and they were like, did you do that yet? And then I had a chat with this other person. Like, did you do that yet? I'm like, huh? I thought it was just some like garbage mass email stuff they were sending me. I didn't realize it was something I actually had to do. But along that same line, Michael, I did just do my annual business filings for the state of Minnesota. So I feel like
2023 annual business filings?
I don't know. No, like we have to register our business with the state of Minnesota, or like renew every year.
Oh, yeah. Okay.
It costs $0, which is kind of nice. $0.
$800 in California.
I bet. Yeah. That's literally infinitely more than Minnesota. But I'm sure we're coming. We're coming for you. But yeah, beneficial owner report I have not done yet. Everybody get on that. But shout out Service Monster. Thank you guys so much for sponsoring the show. Couldn't do it without you. I want to hit on we still never did really uncover where Angela is. She's somewhere on her way back from Omaha. And like I said, the only thing I saw that they were missing was some white-tailed deer. I might be a little obsessed given the time of year and my nature. And I was up till past midnight last night grinding burger. Well, it wasn't burger until I ground it, but I was grinding venison with the kiddos. They didn't stay up till midnight. I put them to bed at 8:30, but then I lost my labor force. And also the fact that they had helped me for an hour probably gave me 2 hours more of cleanup to do. There's just something about you give kids like tools and raw meat and they find a way to get the raw meat all over everything. Like they had raw meat on their socks and they're like running around the house. And it's like, oh my God, I'm so glad your mom isn't here. We'd be in trouble if mom was here, but mom's out of town. So we're going to get raw meat all over the place and not tell her. And we'll just cross our fingers, but at least it's like venison and not chicken. But anyway, I digress. I want to get to like some tax planning stuff. And like I said, this would be boring as hell because we're going to talk about taxes, but we're going to make it fun because that's what we do here. Chad Hupp had asked me actually to make sure I talk about tax stuff. Because he's like, hey man, you got to cover this for all of us so that we know what the hell's going on. And I have a different lens on it than I think most people. I'm going to shock you as to what I tell you about tax planning stuff. But I want to hit this definitional thing because every year, and I had a chat with somebody today about it, and they're like, yeah, I want to meet with my tax person, do some tax strategy stuff. I was like, here's the deal. They tell you it's strategy. That makes it sound super important. That makes it sound so intense that the layman couldn't figure it out, right? It's not a strategy. Like a strategy is a grand plan with a lot of moving parts and unknowns, and you don't know, and you're making educated guesses about what may or may not happen. Taxes are a tactic. It should be called tax tactics. But the problem is that tax tactics is really hard to say back to back. So I think that's the only reason that it's called tax strategies, but it's not a strategy. It's just executing the tax law. There's decisions to be made about when we want to buy stuff, and I'm going to get into a bunch of that. But first, I want to just like tackle these definitions because I don't think there's any strategy to it. I think running your business takes a lot of strategy. Deciding when to buy stuff for tax purposes and what gives you a deduction and how the math plays out. That's a little more of a tactic. And that got my brain working on like, well, what is the definition of strategies versus tactics? Maybe I'm just like making too much of the words here. But Michael, you ready for some Merriam-Webster's thoughts on this?
Is that what we're going to do today? Just like Merriam-Webster, just like read definitions?
We're just actually going to read the dictionary today. That's the show today. Yeah, it's going to be super fun. So I'm starting with strategy, which just in case you weren't aware, the plural of that is strategies. This is what Webster said. So it's the science and art of employing the political, economic, psychological, and military forces. Our businesses probably don't have military forces, but you can imagine what it would be like. Of a nation or group of nations to afford the maximum support to adopted policies in peace or war. It's like big grand arching things, right? A variety of an instance. I love these, right? We're not supposed to use the word in its own definition. I thought that was like just a rule of definitions that you couldn't use the word in its own definition. But here's Merriam-Webster saying a variety of or instance of the use of strategy. Huh? Was it what? A careful plan or method, a clever stratagem. Hey, I don't know who uses the word stratagem. Have you ever said the word stratagem? Stratagem?
No, not once ever in my life.
It's not a word. That's just not even a word. I think Merriam I guess they are like the dictionary people. So maybe they made up a word. But I think the careful plan or method, the art of devising or employing plans. And so it's grand, right? It's the totality. Like there's not a tax planning strategy. Like that's just a thing you execute. The strategy is pay as little in taxes as legally possible, so that you have more money in your bank account in the long run, right? Like that is the overall strategy, which is wrapped around having money to scale a business. To me, the strategies are a little more ambiguous. It's not a if I do this, then this will happen. That's a tactic. Like there's a result that we know we'll get from doing a thing, and that's taxes. We know the result. We can do the math to figure out what the result is. It's not a strategy. Strategies we don't know the result. There's an unknown to it. And so it takes more planning and thought, and there's an unknown, which gets me to what the hell's a tactic? This one's a little more simple. It's a device for accomplishing an end. And they went military on this one too, a method of employing forces in combat. But I think the first one just nailed it. A device for accomplishing an end. It's like, if we do this, then we're going to do this. And that's what taxes kind of come down to is we know the math, like the tax law exists. I don't know all the tax law, so I'm not going to get into all the tactics that you should do. But I'm going to cover some of them, and I am going to explain them how to look at it because I see people go way overboard and this is kind of like a fall thing that we talk about on this show. I've probably done in the last 2 years. I see people go way overboard. And Michael, I bet you've seen that in some coaching where it's like people get carried away trying to save money on taxes to their own detriment. There's a quote. I don't know if it's a quote. I'll call it a saying because I don't know that I've heard. If it's a quote, then I'm just quoting myself because I've said it before. So maybe it is a quote. Yeah, it's a quote by Dan. Michael, you're on mute, but you probably said something freaking cool.
No, I didn't. I was actually just like laughing and chiming in. Great sound effects, but go ahead.
Yeah. Well,
if you can quote yourself and other people recognize or resonate with the quote you just said, that's when you're winning. So keep making your own quotes.
I do have one like awesome quote that like we need to get it in writing. We can cover that one next. Or do you want me to do that one first? Should I do that one first?
Anything to do with what we're talking about?
No, but like shiny object, man. I'm just like excited about it. Squirrel. There's a squirrel. Oh yeah, I should have one of those. But what the hell were we talking about anyway? I don't even remember what we were talking about. Anyway.
It's my fault. I was on mute.
You were on mute. Otherwise, we'd be just going. Otherwise,
we're talking about tactics, right? And then we talked about like a quote that you have people being overly cautious with taxes.
Oh yeah, here we go. Yeah, and I was debating if it's a saying or a quote. And this is in reference to shopping. I feel like there's some sexism in this saying, or at least that's how my brain applies it. Because I always give it as like an example of something my wife would do, but people spending money to save on taxes and my wife isn't a shopper, so this is a bad example, but it would be like my wife going out and spending a bunch of money on things that were on sale and saying like, oh my gosh, I got such a good deal, like all these things were on sale, right? It's like we're going broke saving money, right? And so going broke saving money is the quote / saying, if you will.
Hashtag girl math. My wife tells me that all the time.
And dudes do the same thing. They just do it. Business owner dudes do it for tax purposes to stroke their ego with a big truck. They actually I think like farmers invented this. Every farmer I know does this. It's really funny. They will spend all of their money to make sure the government doesn't get any of it. To their own detriment, right? To make like they won't have any money. Every farmer is poor. They spend it all on equipment they don't need and buildings they don't need to store the equipment that they don't need, or to upgrade equipment that's still working just fine to make sure that the government doesn't get any of the money. And so they go broke spending money, go broke saving money. And so there's a risk in our tax tactics that we overdo it. And it's really easy to overdo it because we look at how much a thing costs, and we like, I see this happen all the time. And the person I happened to be talking to today about this was like, yeah, the tax people I was working with said that they will save me more in taxes than their fees. And I was like, I don't understand how they would do that unless they're assuming that your existing tax people don't know the tax law and they know it better. Or what they're saying is, we're going to get you to buy a truck of which we're going to tell you that you saved, like you bought a $50,000 truck. That's going to be our tactic, which I'm going to get into why this is a stupid idea. But that's going to be our tactic. And so, yeah, you bought a $50,000 truck. We can write that all off. It's going to save you 15 grand on your taxes, right? Because you're going to get the full, whatever your tax rate is, save you 15 grand. That more than pays for our services. Everything I said is true, but that's not the end of it. And that's not exactly how it works. And you're not $15,000 richer. You're in fact $35,000 poorer anyway. Right? Like the truck wasn't free. You didn't just get a $15,000 write-off. You still spent the money. And so when we talk about taxes, that's like the thing I always go back to is what, like, it's real money coming and going. And what else could you use that money for? You might need marketing services in the springtime. And there's this guy, Michael Gregory, I know, that has a marketing firm, and his marketing services would be more useful to you than that truck that makes your ego feel really good. I know for certain you're going to need employees come springtime. And probably about February, you better be recruiting balls to the walls for the people you need in April. And I know for certain that Sean Day would love to help you with that. That is a way better investment than the truck. Like, why the hell get the truck if you don't have the best dude in the world to drive it? I see that happen all the time, but ABC's always be recruiting. Like, don't worry about the equipment. I was talking to somebody the other day. I have a lot of conversations, by the way. But I was telling somebody, I was like, man, oh no, this was even this morning. The guy he's, small owner operator, one of the people without a CRM yet, but gonna have one soon. He was talking about the equipment that he bought. And I was like, we're talking through the investments in the business, and we got onto recruiting a little bit, and then I got carried away. And just over and over and over and over again, you guys, I see this all the time. People will have the best equipment in the world and the shittiest employees. And I guarantee you that if you give me the worst equipment in the world, I will outwork your shitty employee. And I don't even know what the hell your job is. The equipment's just not that important. Like, yes, if you have great employees, you want them using good equipment, they will be more productive, they will be happier, repairs and maintenance will be less. But a great employee, hardworking person will make you way more money with shitty equipment than somebody that has good equipment with shitty employees. And I see people spend way more money on their equipment than on their recruiting and their employee engagement to make sure they have the best employees in the world. Point being, there's a whole lot of things to invest in that are way more valuable than the truck that you think you're going to buy to save money on taxes. There's way more valuable things. That's point number one. Anything to add, Michael? Wait, why can't I hear you?
I keep muting myself. I won't do it again. Very well said. A lot of words. Very well said. I would say, like, you mentioned, you started with strategies and tactics. We didn't really apply that to tax savings. I think it's okay if you do want to use some of these tactics to save money on your taxes, but it's going to be part of the overarching strategy, right? We have people that pay for all 12 months of their marketing ahead of time, right? Or they do something that's going to offset or delay that tax, a future year. And they may do that for one reason or another, whatever it is, right? Maybe their operating account's lower than they want it to be, and they just want to save that cash to use for operating for the next year. But as long as it's with intent, like we know why we're doing this, and not just because we don't want to pay taxes. Because what it does is it creates inefficiencies, right? When you're trying to not pay taxes more than you're trying to scale your business, you end up doing the opposite effect of what you're trying to do. Brandon Vaughn taught me a long time ago, like one of the first things, and he said, it's okay. When you're paying taxes, you're making money. And it's okay to make money. That's why we own a business. And so it's what you do with the money you have. Because after you've paid your taxes, not necessarily paying them in the same way ever again. Now you can invest into real estate or other businesses, other ventures that's going to create wealth for you, which is the point that we're doing this in the first place. So tactics and strategies as they apply to this is very important, but know what the intent of you taking these tax saving strategies or tactics will be in the long run.
Yeah. And my point on the tactics versus strategies monologue I did is don't fall victim to a CPA trying to talk over your head and make this seem more complicated than it is. Like they try to make it bigger and more confusing so that you ignore it, and then they get to charge you more to do the thing. That's like super classic CPAs. I love talking with Megan Likes about it, who is a CPA, and she, like, her number one pet peeve of the entire industry is CPAs love to talk over your head, love to talk to you like that you'll never understand it. Oh, these tax strategies, they're so extravagant. We'll do it for you. We'll just make sure that we'll charge you $8,000, but we'll save you that $15,000 when we tell you to buy a truck. Like, it's not extravagant. It's not crazy math. And I'm going to talk through why that math isn't even right anyway. But yeah, it's tactical, and we know the math, and it's not a hard trade-off. What does tend to happen, and why I got on the rant about, why we get in trouble, like spending money to save money, which is hilarious. Our ego. If Sean was here, we get a little ego lecture right now, because he loves to go into our egos. The thing that causes us to do it is, like, we need this big truck, or we need to have this sweet equipment and this sweet skid because we saw somebody else. It's like the Jones effect. Like, we saw somebody else on Facebook post this picture of their team with all their fancy trucks and their wraps, and they're out in the parking lot, and they posted that picture for their ego too, right? And I get it. Like, we need to do that to some extent, because nobody else is high-fiving. Like the only people we have to like high-five us is maybe our spouse, but our spouse is probably burned out and annoyed with us anyway in our business shenanigans. Our employees don't high-five us that much, right? They just don't. We just kind of have each other. So that's what causes these, like, we need this ego thing to make ourselves feel better that we're doing something that's useful and we should be proud of it. But this whole like spending money to save money on taxes, for one, most of us, this isn't for one, this is really like for two or for three, because we've already made a few points. But I'm bad at counting. I need a spreadsheet. I'm a bookkeeper. We're generally all going into our slow season. There's not many business owners I work with where like January, February, hey, that's when we really hit it big. For most of us, this is our slow season. And so if you just step back and think, I'm about to spend a bunch of money right as I'm going into my slow season, like, tax savings be damned. You need your money. Like, your cash flow is the most important thing. And if you spend that money on that sweet ass truck to try to save on some taxes, sure, you owe Uncle Sam a little bit less. And I'm going to get into the math of why it's not the savings that you think it is. But what you really may have done is totally handcuffed yourself that you don't have the money in February to invest in the recruiting that you need, or the marketing that you need, or the admin support that you need, whatever it is to really truly grow your business. It's not the asset. The asset's the thing you put in place after you have all the great people and the customers to go do the work at. Then you get the asset. You don't buy the asset first. And if you get into February and you don't have the money to recruit, and you don't have the money to like start to get Service Monster set up, and you don't have the money to use Click Call Sell, well, now you just got this truck sitting there that has no work to do because you don't have the money to actually grow your business in the springtime when it's like go time. You spent it in December to try to screw over the government a little bit. And Michael, I like your point. Like, it's okay to pay taxes, you guys. Yeah, don't pay more than you need to, but like, you're in business to make money. If you make money, you will pay taxes. It is not the end of the world. It is far worse to spend all that money and not pay taxes and be broke. That is way worse than paying some taxes and having money. I would vote for paying some taxes and having some money.
And that really good feeling that you've had, I've had, everybody that's had to pay taxes before has, after you stroke that check, whatever that number is, a big number, and you have the money left over, you're like, well, it's mine. I can literally do whatever I want with this. I could light it on fire. It doesn't even matter. I would never do that. But like, it feels great knowing it's yours. And so it's okay. And it's a progressive tax policy anyway. So you're only paying that high rate after like 250 grand anyway.
Yeah. Yeah. It always blows my mind, just in general in taxes, how like people that have lived in this world for an extended period of time and should know this, think that rich people pay less in taxes. And I'm just like, I don't know what rock you are under that you don't understand how a progressive tax rate works. And or you're associating income from their investments in replacement for hard work that they've done, or you're suggesting that people that have worked hard their entire life and earned it and invested it somehow should be penalized more. I just think that's hilarious when like they don't know that how a progressive.
Actually, you might want to just take, I bet 90% of the people know this, but I'm surprised how many people don't know that. They think you make $200,000 a year, whatever that tax bracket is at 200, all of your income's taxed at that. And it's like breaking people's brains. I've had people like, no, that's not right. They'll Google it and be like, whoa, that's amazing. So
I didn't realize the first portion of So here's how a progressive tax rate system works. And I'll get the numbers wrong. And obviously it's dependent on if you file as an individual, head of household, married, blah, 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 joint, separate, whatever. How you file dictates the rates specifically that are applied to you. But something like the first $20,000 you earn, regardless of whether you earn $20,000 or you earn $500,000, the first $20,000 of any amount of that money is taxed at a very low rate. I don't know. It's $20,000. I don't know what the rate is. We could Google it, but just for example's sake, then from $20,000 to $60,000, that $40,000 of income is taxed at another rate that's a little bit higher, and it keeps going up. So everybody's in essence treated super fairly. Now, this is income that you earned, right? This is W-2, or if you're a business owner, this is on your net income. Yeah, there's rich people who they don't work anymore, right? And this is always where you hear like, it drives me nuts because nobody this is just political commercials drive me nuts. The whole like Trump Kamala thing. I don't really like either of them, to be honest. I don't have a dog in the fight. I just get really annoyed when they're like, Trump's going to give billionaires tax cuts. It's like, no, he's not. There's a progressive tax rate system. He's not going to like, he's going to lower it for everybody, billionaires included. What he might do is lower it for investment returns to try to get people investing more, which helps business owners grow their business. Yeah, billionaires tend to make most of their money from investments. Like, it's not an accident they're a billionaire. Most of them didn't inherit that. Most of them created the cell phone that you use, the computer that you're on, the microphone I'm talking through, right? Like, it's not like they just stumbled on a briefcase of $1 billion and they don't pay their fair share of taxes. I'm sure they earned a lot of money along the way and they paid a fuckload of taxes for a long time. But now their money's all in investments. They're generally, obviously, like older individuals with a bunch of money coming from investments. They might not even have a job anymore. They might just be distributing their capital, which is just taxed at a different rate. It's
really
fine.
Quick for Jai, I did put a link into this StreamYard chat. He can put it onto one of the channels you're doing. Lowest tax bracket, 0 to 11,600 at 10%. Highest tax bracket, if you every dollar you make above $609,351 as a single filer and up, your tax at 37%.
Oh,
married filing jointly, every dollar you make above $731,000 is taxed at 37%. So that's the highest rate.
The link,
yeah,
the link is in the chat, in the private chat. There.
Where'd it go? I opened it. Here we go. I was doing the Hall of Mirrors thing there for a second. Yeah, there you go. This is how the bracket.
Nice.
Yeah, so if you are married filing jointly, which is what I'm looking at now, and you're making $200,000 a year, that last $100,000 essentially is taxed at 22%, but the first $100,000 is taxed at 12%. Most people that own home service businesses are sub $1 million, right? So you make a 20% net profit margin, which we can talk about that too, like workers' comp, payroll tax, etc. But you're probably bringing in 20% net profit, 200 grand at $1 million. So most of your income is going to be coming in that 12 to 22% tax bracket. So you're 15 points lower than somebody that's 731 and up.
And your effective tax rate is the combination of all these. Like, your effective tax rate isn't really 22%. It's the weighted average of how much got taxed at this and how much got taxed at this. What is always interesting to me, and I don't know the logic behind it, but like, if you're married filing joint and you make 731,000, you're at 37%. Like, but it's not. It's like way less than double the single. Like, man, we should all just stay single, right? I don't know. Like, what, we just get penalized if we get married. We pay more in taxes. I don't know. I'm just, maybe Marty. I'm gonna call Marty. Now here's a strategy. We want to talk tactics versus strategies. I got a strategy for you.
It is double up until a certain point in time.
Yeah. It's like, it's weird. I don't like all the incentives they try to do. Realistically, I just wish, like, I think our tax system is so overblown and it just creates all these incentives, which literally, and this is funny for me to say as an accounting nerd, I feel like they created an industry out of thin air. Like, there's so many people that work in the tax industry, and like, it's not really value added to anybody. Like, it just creates all these crazy ass incentives with the tax code is however many days long. And I'm just like, we just fabricated all this stuff. Like, how many billions of dollars get spent on this thing in order for us to pay money to the government to do communal things for all of us? It's a weird concept. It's so inefficient. And part of me wonders, like, sorry, we're going off on tangent. I'm going to get to some of the business tax stuff here in a second. Part of me wonders, like, why they already know how much we make. Why do we even file taxes? Why don't they send us the tax information? They have it all.
Good point.
It's super weird. Like, do they just do it for job security for people like me? I do bookkeeping. I don't do taxes. But it makes me wonder. It's like, all this information is already out there. They already have it all. They're all stalking us. They're listening to everything we're saying right now. So why the only thing I justify is they'd put millions of people out of business. Probably there'd be a lot of unemployed people if they got rid of that industry. It's a crazy huge industry. I don't know. I don't have that answer, but it makes me wonder. It's one of those things where you think maybe we're living in the Matrix. We're living in the Matrix right now. We're We're already in the matrix.
Here.
I want to do some math. Can you hang in there with some math with me, Michael? Because
I can get down with some numbers.
You gotta do some numbers. Here's a funny thing that I see, and again, this is why I think you need to question when somebody's like, "Oh, we're gonna do tax strategy planning for you." Yeah, it's nice to have help from somebody and like weigh the math of it and make sure you're doing the math right. CPA is super useful for that, and you're not going to be a tax law expert. Make sure you have a good tax person or CPA that's up on that stuff, because the better they know it, again, the better they know what tactics, the more money they can save you because they're employing more of the tax law on your benefit. What I think is funny though is we just generally have this like intuition to Cole Sigafoos in the house. What's up, Cole? He's rolling the dice.
Oh, that's my craps dude. Yep, there we go.
Cole's out there rolling the dice.
Terrible roll.
I get to see Cole in a couple weeks here chasing some whitetails, just like JC and Angela should have been doing. Cole and I'll be out in Illinois chasing some whitetails. But so when you're talking to your tax person and they're talking about all these strategies that you should be doing, I do think like you need a good tax person. Tax law is not something you need to be an expert in. Make sure you're using a good person that communicates well and is really responsive. But here's where I see them do a bunch of work for you that they charge you for, but it doesn't actually add nearly as much value. And to what I said earlier, that person I was working with today was like, yeah, they told me that they're going to charge me this much, but they guarantee they'll be able to save me more in taxes than their billing is. And it's like, more versus what? It kind of reminds me of the Diet Dr. Pepper slogan. Diet Dr. Pepper tastes more like regular Dr. Pepper. Well, then what? Like more like regular Dr. Pepper than Mountain Dew? Well, no shit, right? More than regular Dr. Pepper versus water? Yeah, no shit, because it's just the diet version. Like that, what does that saying even mean? It's the stupidest slogan ever. And so, of course, a CPA will be able to save you money versus their fees compared to if you didn't file your taxes, right? Like compared to what? Compared to another CPA who they don't even know, compared to what you filed last year. Well, I could save you more in money than what you filed last year. All I got to do is get you to buy a stupid truck, which is actually bad for you, but I can still say I saved you more money. So here's the math I want you to do when some CPA person tries to sell you some shit. Let's use a $50,000 truck. This could be any asset. This could be any service that you would pay for. And we're going to use this progressive tax rate system. And I still got it up here. It's still on my screen. We're going to look at that and we're going to put a bracket on there based on this $200,000 business of what you would really pay in taxes. And therefore, that's what you're going to be saving if you buy this truck. So we're just going to do this simple math real quick here. $50,000 truck. You're going to buy it in December rather than in March, right? Let's buy it sooner. We're going to save all this money. And so you buy this $50,000 truck. And we also have to make one other assumption, which is that you can do what's called a 179 deduction, which you generally can. Michael, you're on mute again, just in case you didn't realize that. I just like, this is a forewarning. Oh, look at you bringing her down. So it's a $50,000 truck. We're going to assume that you get to deduct it all in year one, which like historically that wasn't the case, right? This has only been around for the last few years here. Last 5 to 10 years. I don't know exactly when the 179 deduction started. I think it started under Trump the first time here. But basically that says you get to like fully expense that asset. You get to write off all 50,000 of it versus it used to be that you had to write it off over 5 years, which would make this case even worse for buying an asset if you had to write it off over 5 years. It makes it better if you get to write it off in year one for the tax savings sooner rather than later. But you got this $50,000 truck and you're going to buy it. Again, keep in mind, like the first thing that happens when you buy a $50,000 truck is you're out $50,000. Like that's a lot of real money. Now you might finance it, but now you're going to incur interest charges, and those interest charges are going to for sure offset this time value of money thing that I'm going to talk about here in a second, this is really like the math you need to be doing on this. You buy this $50,000 truck. Let's just ignore this immediate cash. Let's assume you financed all of it. So it's not even like you're out $50,000 right away. Even if you did finance all of it, though, you still get the tax write-off, which is pretty cool. You still got this asset. You can still show that you purchased it. They don't count that you have a loan against it right away. So you got this $50,000 truck. Now, a $50,000 truck doesn't mean you saved $50,000. If we pull up this progressive tax rate thing here that we had, and let me share my screen again. We got this $50,000 truck. Let's say we're a $200,000 business. Just for like simplicity's sake, let's say our weighted average tax rate in here is like 15%, right? Like between all of, like, we got 10% charged. I'm doing a married filing joint. So assuming you're married and you're collectively making around $200,000, whatever. The tax rate roughly is going to be around 15% weighted average between these different tax rates as you go up. So you bought this $50,000 truck. Well, it's not like you're saving $50,000. You're saving the taxes associated with $50,000. 15% of 50,000 is $7,500. Okay, so we saved $7,500, right? Well, no, we didn't save $7,500. We saved $7,500 this year, but we were going to buy that truck in March. So now we don't get that $7,500 next year. We got $7,500 this year at the expense of $7,500 next year. So all we really did is like move this tax deduction forward. We were going to get it next year anyway. And it's different in an election year. Like, we don't know what taxes are going to be next year. So there's a little bit of an unknown. If we think taxes are going to go down, then we sure as hell ought to try to spend money at a higher tax rate now to like save, because the income is going to be more valuable later. If we think tax rates are going to, I might have got that backwards. Let me think about that. If we think tax rates are going to go up, if we think tax rate, I did get it right. If we think tax rates are going to go up, we want less income later, then we should almost like wait to buy it later. If we think tax rates are going to go down, we should buy it now when the tax rate is higher. Maximize the savings. So we don't know what tax rates are going to do, though. That's pie in the sky right now. So we're going to buy this $50,000 truck that saves us $7,500 in this tax write-off. And again, that's like maximizing it. Historically, this truck, you would have depreciated over 5 years. So you'd have got this tax write-off over 5 years. Now we get the 175 or 179 deduction. We get to write it off all this year, save $7,500. But you didn't really save $7,500. Again, there's real money that you probably spent, but also now you don't get it next year. And so all that really happened is you moved $7,500 of savings a year forward. So what really matters is, what do you do with that $7,500 for the next 12 months? That's the true value. And if you invest $7,500 back into your business, like, what does that return you? If you take that $7,500 and like invest it in the stock market long term, it generates 8%. What's 8% of 7,500? It's like $500. Hold on, get the calculator out. This is too big a number. This is too big a math. $600. So if you save $7,500 in taxes, and this is just like time value of money. This is like classic nerdy finance shit. It's just time value of money. You moved $7,500 a year forward. It's worth $600 if you can invest it at 8%. But again, you probably have a loan on that truck. And so if you borrowed the money at 8%, you're literally break even on it. And then all that happened is you got yourself a truck and you're out a bunch of money and you saved zero. It doesn't benefit you at all. The time value of money savings you got is the same as the interest rate you're paying on that loan. But now you spent the money on a truck. And so my point being is, you didn't save $7,500. You sure as hell didn't save $50,000 by spending money on a new truck. You didn't even save $7,500. You just moved that tax deduction a year forward. And then you do this nerdy finance thing called time value of money and say, what can I invest that $7,500 at? What's the return that it generates? And that's how much money you really saved. And so when that CPA comes and says, hey, we're going to do this tax strategy planning, and we're going to save you more than our fees, you do that math and say, this is worth $600 to me. I'm paying you $8,000 to do all my taxes, or whatever it is that you're paying them. Show me how you're going to save me more than my fees, because it's not the $7,500 that truck is, getting me a deduction for. I would have got that next year. It's the time value of money in between. You're going to knock their socks off. And then you're also going to make them feel like an idiot because they won't probably have a good answer for you. I'm not saying don't buy stuff coming down the stretch. There is stuff that you should buy if you know you need it, right? Don't go buy a huge truck. Go spend money with Michael at Click Call Sell and spend money with Sean at Hire Lead Chill to make sure you have a bunch of awesome employees and a bunch of awesome customers so that you need a new truck. Get the truck after you have the employees that can ride on that truck and you have the customers for them to go out to. And Michael, you mentioned this earlier, and I don't want to put you on the spot here, but I'm gonna. So maybe I do want to put you on the spot. Michael, I would like to put you on the spot now.
Now you're making me nervous.
But like if somebody comes to you and says, hey, Michael, I would like to sign up for a year of Click Call Sells Google ad services. And I would like to pay you that in December so that I can write it off on my taxes this year and you have to pay the taxes on it. Would you allow that?
It happens very often. And of course we do it 100%.
Hell yeah.
Hell
yeah.
Yeah.
And
I mean, I say what I tell you. I'm like, what you're doing here is maybe not what I would do, but you can, of course, pay me for the entire year.
Mm-hmm. Any vendor would gladly have your business and pay the taxes for you. That like you're guaranteeing them work. That's great if you're a vendor. Like I love guaranteed work. And I would gladly pay those income taxes for you. Like I'm on it. I'll pay those taxes and have the guaranteed business so that you don't have to pay the taxes. So my point is, don't get suckered into like trying to buy trucks and equipment. Like if you know you're going to need it and you know you're going to buy it in March, no doubt about it. Absolutely. There's no question. Sure, go ahead and do it in December. Like, why not move that $7,500 deduction forward? Sure. Just know that it's actually more like a $600 value. It's not worth $7,500, no matter what any CPA tells you. And think about the things that actually grow your business. The truck does not grow your business. The wrap on the truck can kind of grow your business eventually, but a wrap takes a year or two to actually like really start generating a positive ROI. What grows your business, to me, first and foremost, and I'm biased, the thing that grows your business the most is having great employees. That always grows your business the most because you can't afford to hire Michael if you don't have good employees. You don't have anybody that can go out and do the work that Michael can create at Click Call Sell to get you leads if you don't have good employees. So you got to have good employees. And if your employees leave, then you got to tell Michael you can't afford, you don't need his service anyway because you don't need more customers, right? Everything functions first around good employees in order to grow a business. And then the second thing you need is marketing so that those employees have some stuff to do. And then you get the truck, right? And it all obviously happens faster than that. It's not like you don't put them in order that way. But in order of importance, the truck and the equipment is last. For sure. Again,
I can say something I've got a lot of the people listening can identify with. So every business has some level of seasonality. I mean, maids service is less than pest control, right? But I mean, every business is going to have some level of seasonality. Mm-hmm. And when you are running a stage 1, 2, and 3 home service business where the volatility is more severe, what I typically see in owners is they get like fat and happy during the busy season, but that money is used to pay down the debt that was created in their slow season. So using like pest control, exterior cleaning, a lot of the people that listen to us is January, February, and March, they go into $20,000 of credit card debt or whatever. They're in debt, right? Oh, yeah. Then it takes April, May, June, July to pay it back. They finally start to collect a little bit of money in August, September, November. And then they're like, ooh, now I need to pay off all these things. I don't have to pay taxes this year. Then they run out of money again and they go back into debt. And then you didn't even consider the interest that you're paying on the credit card debt that you're carrying for the first 6 months of the year. So you should be focused on the people that I coach. A primary emphasis of importance when we first start coaching is we need to get your operating account to where it doesn't get below zero. We've got 3 months of operating expenses inside your account. You can take some and put it in a high yield savings account, do whatever you want, but we need to have money so you're not going into debt. Because I'm coaching somebody right now, literally October. They just got to break even for the year. Now they do hundreds of thousands of dollars in Christmas lights, so they're going to make a bunch of money, but it takes them 10 months just to get back to zero. That's crazy. Like, don't do that. Yeah.
We, in our Minneapolis business, like we just know it costs us $120,000 over the winter. That's like, we might get a little bit of revenue in here or there, but we're going to be in the hole $120,000 bucks. And that's before our loan payments. Like that's not even just the pure cash flow. That's just our profit and loss. Where like it might cost us closer to
So
130.
if you've only got 30 grand in your operating account and you're going 90K in the hole, you've got interest at least month 1 on 90,000, month 2 at 70,000, month 3 at 6. You're paying tens of thousands of dollars in interest. So to save your $1,000 in taxes, that's like literally 1 month of interest payments if you have to go into debt.
It's bonkers. Let's Alvin dropped a question in here. Please repeat. I was writing it down, lost the second part of good employee, and then dot. So Alvin, here's and again, and Michael coaches a bunch of people too. I coach and I play CFO for a ton of people. Over and over and over again, always, and I don't know that it will ever be any different than this, is the people that are crushing it and scaling the best business have the best culture, best leadership, best employees. It's not the marketing side. No offense, Michael. They obviously have to go get customers too. Marketing's super important. And it's not the equipment side. So much, especially when people start out, like they obsess because you're in the field, you obsess about the equipment, the rig, whatever it is. And that's like the least important thing to grow a business. Great employees will do way more with shitty equipment than an average employee does with great equipment. If you have the best employees in the world, there's a few things that happen. So I just always start with recruiting. To me, it's the best. It's so cost effective. Like getting the best employees in the world is very cost effective. It's thousands of dollars. It's not tens of thousands of dollars in a lot of cases, depending on the size of your business. It does a few things. One is it makes your life easier and better. That's pretty important. It makes your marketing work way better. I'm sure Michael can talk about times where he's had a hard time doing marketing for people because their business sucked, because their employees sucked. You can get them so many leads, but it's hard to convert. And then the business is probably whipsawing and saying like, hey, Michael, we need you to stop. Our 2 employees quit this week. We don't need any more leads. And so it's hard for Michael to do a really good job if your business sucks and your employees suck. So first to me is really good employees. If you get really good at recruiting, your life is way better. Your marriage is way better. Your marketing works way better. And you can aggressively invest in marketing. It's really hard to give Michael a blank check and say, Michael, I just need you to grow the shit out of this thing. You can't do that if you don't have good employees and you're not confident that you can go execute. You need to be able to be confident you can execute before you can hire Michael to go bonkers, right? And you want to be able to hire your marketing firm to go bonkers. You want to give them a blank check. Like they're the ones that can like unleash your growth, right? But you can't do it without good employees. And so if I'm going into tax time and I'm thinking like, hey, yeah, maybe I want to spend some money to try to reduce my tax liability, right? Which again, like if you know it's something, if you know you're going to need something and you have the cash flow and you have enough cash flow to even be healthy all winter long, even and like you've stockpiled a big enough war chest that you're not going to have to borrow credit card debt, then I'd say start talking to your recruiting company and your marketing company. Like don't buy an asset first. Again, just buy what you need. Not you might need an asset, but like the order to me is recruiting, marketing, assets. Get the great employees first, recruit even before you need to hire. Like I'm recruiting right now. I had a group interview yesterday. I got one more follow-up to do. I won't have a job for these people for 12 months. Didn't stop me from recruiting. In our window cleaning business, we use click, call, sell. We're full. Like October is going to be a bonkers record month. I don't think Andy told Michael to stop selling stuff. Like I think we're still running some Google ads. We might not be able to serve everybody, but we do want their information because next year we will. And in the spring we will, in the summer we will, in the fall we will. We have you're on mute again, but it's cool because you probably
then you start cross-selling that Skeeter Deleter, that new brand. I love that.
Right. It's like you don't shut your website down because you don't need more leads. Like you keep the doors open. So we always talk, always be recruiting. I saw Jai had it on the screen before. So Alvin, to your question, I think like good employees change everything.
There's a caveat to what you're saying. Is one, you need a good bookkeeper, like Best Damn Bookkeeping, to keep track of your vehicle repair and maintenance, right? Because people always look at like how much it cost me to fix a transmission or change tires or a hose on my pressure washer, whatever it was. But they don't take into account the number of days it lost capacity, right? So if it was in the shop for a week and that thing produces $1,000 a day, that cost you $5,000 plus whatever it was to fix it. So you have to look at that. And then if you have a great bookkeeper, then they can say, here was your repair and maintenance costs. Now you'll know which one of those equipment pieces or vehicles was your problem piece.
Yeah, you know. Oh, you know.
You can address it. Oh, you know, but like there's people that are running 6-7 truck operations that are kind of separated from operations.
Yep.
And if they don't have an operations manager that's on top of this, it's really easy. But you look at there's a range of success in every line of your P&L. And if you look at vehicle repair and maintenance or shop repair, whatever you have your line item called in your P&L, and you see it's above that number, usually 1%, then we're like, okay, it's above 1%. We've got an issue. So now we can go back, look and see what piece of equipment or vehicle is causing that issue. Bring that to your operations manager. That's one of the hacks that I have in coaching is I go through people's P&Ls, and I love when they're using Best Damn Bookkeeping or, a good bookkeeper, is because I can literally tell you about your business without even knowing you. Like I can be like, your equipment's old, run down, your vehicle's out disorganized. That's how I got JC to have how we became close, because I just told him about his business before I even knew him. And he's like, dude, this is amazing. How do you know all this? I'm like, just you got good books.
It's in your data, man.
So the point is you can have bad equipment, but you don't want to have equipment that's like precluding you from doing a good job.
Yeah. But your good employee will probably make sure that it's running, and they'll change the oil so that you don't have a pressure washer lockup that you need to replace, right? Like the good employee will take care of even your shitty equipment better. We have in our Minneapolis business, I think we have 15 vehicles right now. And we have a hierarchy of them. Like we have some nicer, newer ones, and then they get older and older and older and older. We did retire a couple for safety reasons. At some point, they're not safe anymore. But you're always going to have an employee that gets a damn D-dub or something like that, and then they need a breathalyzer thing, or the insurance won't cover them, and then you got to get a progressive policy. Like this is just a real world thing. And so when we have drivers with bad driving records, and they might still be a great technician, right? But our insurance company literally won't cover them, and we require that they have to be able to drive. So we take out a progressive insurance policy on the oldest, cruddiest, crappiest van that we got, but they still have a job. The windows might not go up and down, and the AC might not work. But they got a van. They can go out and do some window cleaning. And so there's like a hierarchy of your equipment. Once you get to that level, you always have like a backup too. Like we'll have a couple like oldies that are parked and ready to go if we need a backup immediately. Not saying you should keep if you have 3 vehicles, you're probably not going to keep a 4th one as a backup. You might have like a personal vehicle that you can use in a pinch or something like that. But to Michael's point, the downtime is the ultimate cost. Like you can't have all that downtime. So you got to have solutions for that. But again, good employees will do the right things that will cause your equipment to not die, that will cause your truck to not whatever go wrong. Like good employees take care of your shit. And again, so to me, like if I'm gonna spend money in the winter, in December particularly, to save on taxes, I'm spending it with my vendors that do recruiting and marketing. I know I'm going to need them. If I plan on growing at all, I'm going to need employees and I'm going to need customers. If I know and again, like, but don't do it on credit card debt. Like if you're doing it on credit card debt, just hold off a little bit. Like keep money in your bank account for the winter. Again, like it's okay to pay some taxes. You can delay your tax. You're not going to pay your taxes until March or April anyway, which is when you're going to be back making cash flow. And if you don't even have it then, you can punt it till October. So like even your 2024 taxes, it's not like you're paying that tax bill. You're not really paying it until April 15th, right? Hopefully by then you're back in some cash flow. So it's okay to pay some taxes. It's not okay to run out of money in the winter and not be able to like employ these things. And just make sure you're doing that math. Understand that it's really a time value of money thing. You're just moving a deduction forward or backward. You're not losing it. You're not gaining it. You're just moving it around. And the value of that's a hell of a lot less than what the CPA tells you. They're like, we're going to save you this by you spending this much money. Do get a good CPA. Do make sure they know tax law. Do make sure that they're using it fully to your advantage. Again, that's not a strategy. That's a tactic. That's their job. Like they better do their job and know their job. That's literally what you hired them for. I think that's it, man. I think we covered it. I think we nailed it.
Great stuff.
Taxes, man. It's hard to get taxes to me. They're one step below insurance in terms of like the ultimate boring things. And this is coming from a bookkeeping dude. come from bookkeeping. Hence, as Jai just put on the screen, best damn bookkeeping. We make bookkeeping not suck.
They are terrible. One thing you didn't mention though is like prepaying your taxes, so you don't get that gigantic tax bill, in April. So you can just like pay them quarterly and just like little chunks aside. In the profit account or a tax account that you're just putting that money away all the year. So it's because it sucks, man. Having to pay 10, 50, 60, 80, $100,000 in taxes and just like that, like you feel great, and then all of a sudden you're deflated.
Oh yeah, and it's like, and you usually have already spent all the money somewhere else because you didn't save it.
Yep.
I'm a huge fan. Even like we can pay our sales taxes quarterly, or like there's various times we can do our sales tax payments. My strategy is like I want to have everything at least paid monthly. I don't want to have big cash flow swings. If I could pay my income, I mean, like when you get a W-2, you pay your income taxes every time a check is taken out, or at least an estimated portion of it, right? Man, if I could do my estimated taxes on like a weekly basis, I freaking think I would do that too. Like, I don't want to have any big cash flow swings. I hate big cash flow swings. They're hard to plan for. They're a total distraction from what really matters in your business, which is taking care of your awesome employees, taking care of your awesome customers, taking care of your equipment, taking care of your awesome employees so they can take care of your equipment and your awesome customers. Booyah. So that's
Great
it.
Show, man. Great show.
Don't buy a bunch of shit. Don't think it's tax strategy. When they tell you
prepay your bookkeeper, prepay your marketing company, prepay your recruiting company. Those are fine. Everything else, just save it.
Tax tactics.
Yeah.
Tax tactics. Maybe we should just call it tax sticks. That's hard to say too.
Wordplay.
Oh, I was going to tell you my quote. I think I've told you my quote. We're gonna end you on my quote.
I've got a quote too, so hustle up. Go.
Okay. So my quote is I would always rather have a price with no deal than a deal with no price. I think I've told you that one before. Because everybody else would be like, oh, if you sign up by now, it's 10% off.
Oh, yeah.
10% off of what? Like, just give me a price. I don't need a deal. I need to know what I'm going to pay. And those convert better too when you give somebody a price versus a deal. A price with a deal, or a price without a deal, is better than a deal with no price.
I like it. That's a good one. So I've got my friend would disagree with me. He thinks he invented it, but it's mine. Okay. We're not trying to reinvent the wheel. We're just trying to make it roll a little bit faster. Wow. Like it's already been done. Let's make it better. Shout out to Chris.
Let's go.
On that note, business nerds, you guys know what to do. Work smarter and harder. Go earn yourself some pride. Who do I got on tonight? I got Josh. This is Michael. You and I talked to this guy. We had him come in and talk to Sean too. I'm looking up his last name so I get it right because I don't want to sound like an idiot. Josh Smith, like the easiest last name, and I couldn't even get it. Literally, his last name is Smith. But Josh Smith is. Josh is like a benefits ninja, and he's got this thing, and I won't get it right. But if you have a certain number of employees, you can basically like save money on payroll taxes and give them health benefits all at the same time, and you don't have to pay for it. It's almost too good to be true. He's gonna talk all about it, and just everything else that he does for small businesses. So if you own a small business and you got a couple employees, even I think the limit to use what he's got is like 10 employees, and it's something from Obamacare. But it's bonkers, you guys. You got to tune in. I'll be talking to Josh tonight. I just checked. He's good to go. Josh Smith is good to go. He's going to be here. We're going to have some fun talking about nerdy stuff that'll save you a lot of money. Give your employees great benefits. Like, why wouldn't you want that? Everybody wins twice or 3 times, something like that. We'll see you tonight. Peace.